All right, guys. Good morning. Morning online. Good to see we've got another person online sending a few messages. So, hi Lee Way as well. I thought I'd start off with a bit about what's been going on today because it has been bonkers. Last night's the biggest fall in the Dow ever in terms of points. Biggest fall I think I can remember in the S&P as well. It's 160 handles. So that is massive. Few reasons for this. I don't think there's been anything majorly fundamental to start with. I don't think there's anything really come out that would make people panic. I think what it has been a part of is a lot of crowded positions that have then all started to turn over, and as people have then started to panic out of positions, you've then got this continuation move. We'll talk about it a little bit more in equities, but it's partly to do with, I believe, a VIX trade. We were talking about options yesterday, and the idea of what the trade is effectively is as volatility spikes, because usually volatility spikes on S&P full, there's a trade whereby you effectively sell volatility and then buy S&P, which should theoretically, one, push volatility down, and two, put your S&P trade on the side. So if you do that as an options trade, you can do it, collect the premium by selling volatility, and then invest the premium to buy S&P. The problem with that trade is when the S&P doesn't then bounce back, not only are you now offside on the S&P, you're down on premium and looking at potentially a lot of loss on the options as well. And I think that's potentially what's caused this sort of liquidation. Recently, almost every drop in the S&P has been met with a drop, possibly a little bit more drop the next day, a bounce, then the following day we go up and then continue higher. I think this seems to have spooked people a little bit, whereby it didn't do that. It kept coming off, and that's what's really got people panicking. I've got a chart up here. This is 2015 August in the S&P. The last time I remember that it really had a proper major sell-off. This dropped in 3 days from 2050 down to just below 1800, so 200-ish handles. And also down here did hit the limit down. We didn't quite do it last night. We were 14 handles off the limit down last night and have then since rallied back up. So what's it mean for today? I think very much similar to yesterday, unfortunately, for equities. I think we're going to see, or we have seen, this quick run up, hold. We've sat, I've been watching the DAX and the S&P this morning, and both of them have just, once they've gone up into the cash session, have just sat dead still for about an hour or so. And it was quite a decent sized range. So the DAX range is about 30-40 ticks, but it's quite difficult to play that knowing the volatility that's in the market. We have just broken down, so we're starting to drift back off, which is now starting to make me wonder, could we end up with similar things for yesterday, whereby as the European day progressed, we did drift a little bit lower, and then once the once the EU shut and the US properly took over, that's when it started to go again. Maybe we'll see that again today. I think that'd probably be a bit much to see sort of 50 handle move, 150 handle move, and then another again. But it's not to say it won't, and that's the whole point of a panic. Once it starts to go, no one's going to buy it. No one's going to sit there thinking this is a good buy down here, and we could see it go once again. If we do, we could end up going down to the limit. Ideally, and it'd be great if you guys get to see it today, we go back down now, Europe comes off, goes back through its lows, and we actually hit the limit down on the S&P. So if we do that, whilst we spoke about it yesterday, and I thought, well, it's a good theoretical basis that I think you should all learn or understand. I didn't think you'd ever actually end up with the possibility of seeing it. So this is what happened last time we got the limit down. This was the 24th of August 2015, and what happened is S&P hit the limit 15 minutes before the US cash open. So what happens is they have a limit of 5%, and then they have a limit of 7%, and then 13, and then 20. Because with that fall last night, everyone looked it up, so everyone does know they are the percentages. And so what they have is each limit, it stops the market going any further. If the market then locks to the limit, so it actually just sits on the limit, they will then, at some point at the exchange's discretion, let it go again, see if it can find some kind of, I think effectively they're hoping it'll find a bounce somewhere. What happened, and this I think is probably the most important thing in how you can trade it, is it sits on the limit. So it sat on the limit for 15 minutes, and what you'll see is you will get a massive offer on the limit price. There'll be no bid below it because you can't put a bid below the limit, and you'll just get a massive offer on the limit. If you join the offer, you will eventually get filled. So it'll start with, maybe it'll be sort of like 2,000 on the offer at the low. It'll go up to around maybe 15,000. And then what happened is as soon as it opened, the S&P just spiked straight down and went again, hit the next limit, and then bounced back up. So this move here was 40 handles down, and then we bounced 27 handles back up. And that's on a 1 minute chart. So yeah, and the big bonus with this, or with it hitting a limit, is you can get filled. If the market is in a panicky situation, it's not going to bounce off the limit. So you can have a very tight risk that you've then got, say, 15,000 lots that it's got to trade through just to get it against you. So if you start seeing it trade through, you can always get out. So you've got some safety and an ability to get out, and also a reasonable assumption that as soon as it opens, the market's going to go again. And so it should put you on side a long way, very, very fast. And then it's your choice in how you exit that. Do you wait and try and see if you can get out on the next limit, or do you sort of take increments as it drops? The other part of the trade, and this is something that I sort of thought about after this happens, didn't really think about it at the time, is looking at another market as well. So this is what happened in the DAX at the same time, and the Euro stocks did exactly the same thing. Once you went to the limit, you got a bounce in the DAX, which effectively created a bit of a flag, starts to come off again, and on the US Open, the DAX then gets sold with the S&P. So the S&P drags it down, and that DAX move, I believe, was 200 ticks, and that's on a 5 minutes it took to do 200 ticks. So there's scope to, even if you're not trading S&P, use what you can expect to happen in the S&P to give you a trade in another market. And I would expect European markets to get dragged on that fast flush down in the S&P. So we could see it today as the S&P trading now. We are 2602, so we've got to do 87 handles to the downside to do it. I would say it's unlikely, but after yesterday, I'm starting to think nothing is quite as unlikely as you might think. So just something to be thinking about for the rest of the day. Other things to be thinking about as well, with such a large move seemingly out of nowhere, people are going to start getting worried about this, i.e. politicians and central bankers. You could get a comment somewhere throughout today regarding the fall and potentially talking about a reaction to it. Now, whether this comes in the form of something very, very extreme, i.e. the most extreme reaction I think you could possibly get is the Fed cuts interest rates. I'd be shocked if we saw that. It really would be a big shock, but that's the sort of super outlier that if you've got in the back of your mind could, offer you a very, very good trade. And everyone who's got short last night and in the overnight session is all going to get driven out, and we could see this 100 handles up. Other things, Fed could talk about slowing down on their reduction of reinvestment. I think the more likely is something from Donald Trump. What he could say, who knows, and that is the beauty of having him as president, that you just don't know what he could say. He could suggest a tax cut. He could suggest the US government buy equities. All of these things are, with any other president, I would say, pretty farcical, but you just don't know what he could come out with. And the best thing about it is, excuse me, it is highly likely to come out on Twitter, which will mean we'll probably be one of the first people to see it. You won't get the news reading algorithms trading it because they can't read Twitter, or they can, but they're not as good at it. And also because of the fact that we don't know what we're looking for from him, the news reading algorithms aren't going to be able to program what he could say. So I think this potentially there's some good opportunities out there. But I think it's more a case of have these ideas in your back of your mind. I don't necessarily think any of them are going to happen, but I'm certainly going to be ready. So I got a great question. That's his lead in ES in the EU session. Yeah, I think generally you do get this sort of flip from Europe will lead the US in the European session. US will very much take over in the US session. I think it also depends on why the move is coming about. If the move is relating to particularly a US theme, then I think it will be more US led even in the European session. But this move this morning, I think, was probably more sort of a European led move on the basis that, similar to yesterday, European equities were lower on the back of a drag in the S&P. They then got bought straight back up because there's no fundamental reason for US equities to actually, European equities to actually be that low. So that's why I think you've had this rally back up. It's now a case, I think, if the S&P decides it does want to go again, this could very well drag Europe once again, particularly if it's done after market, particularly if it's done later on in the day, sort of 6, 7 o'clock, like the S&P move was yesterday. So, do we get a repeat? Unsure at the minute. I think that today we're going to get a bit more of a consolidation. We're going to get a bit more sort of waiting to see what's going to happen. Maybe we'll sort of pull back on the big move that we've seen so far in Europe, and then we'll start to just see a bit more sort of range-bound trade. And then tomorrow we either get a move back up, which is then going to catch everyone who's continued to sell it, and we might get a quick rally higher, or we'll get the continuation lower. But yeah, keep those ideas out there. One thing that, or market influence that has happened in the past, SocGen got out of a position in European equities, which dropped the European equities about 7% in a day. The Fed the following day did cut rates. So there is precedent for it. It is possible. Just keep it in the back of your mind. Keep it there. But yeah, a good day to start trading on the sim, because there's going to be a lot of things to be clicking. There's going to be a lot of opportunities to just trade over and over and over and sort of get yourself involved. I think that's the most important thing to start with. Right, so let's just go make sure everyone's up to speed on Sim. Yes. Have you guys all sort of logged in? You've all set up workspaces? Perfect. So this might be quite quick, which would be quite nice. So you've gone through a new workspace bit. For those of you online, if you've not already changed it, the little icon in the top that says live, make sure that's flipped to sim. Otherwise it won't give you any ladders, so you won't be able to trade. You've all done this bit, I assume, so we can skip that. Create a new workspace, save it as something, and then you end up here. Everything on this comes as a widget, so it's a bit like an app rather than a sort of more desktop-based system. So it all comes as a widget. In terms of the main things you're going to need, MD Trader is your trading ladder. Market Grid is not massively used, but that will give you every month for each contract. It will give you, effectively you can see the spreads between them all, but it's not something that's going to be massively used, particularly if you're trading sort of equity futures, bond futures, currencies. That it's only when you need the shorter end futures that Market Grid's really going to come in useful. Time and sales shows you exactly what went through, at what time, at what price. The benefit of this is it allows you to sort of read the ladder a little bit more clearly, or sort of spot something that has happened as it comes past. So perhaps there is, I don't know, 1,000 lots sitting on the offer, and it looks like it went straight through it, but you want to know if it actually traded it. Time and sales will tell you that, so you'll be able to see. So then you know that actually he was genuine, and now he's got his position, and now he's offside on it. Order book, I'm assuming you've all got open, or you may or may not have. Order book you don't necessarily need. It just allows you to put orders around and then manage your orders. We'll have a quick look at it in a minute. Fills and positions I would have. Fills show you where you've actually got in, particularly if you're adding to a position and getting in and out of a position. This will at least then enable you to realise where your actual position is rather than just your average price. And then positions will tell you your P&L. Right. Okay, so you should have the product code list now, so that should be able to give you virtually everything. Like I say, you won't have ICE on here, but otherwise I think you've got everything. Have you got CBOT? Can you get up a T-note? Yeah? Right, so yeah, you've got Eurex, CME and CBOT, so they're the main ones. Unfortunately, you won't have FTSE. You're unlikely to need anything other than the ones with the little blue icon, so that keeps that nice and simple. I'll be honest, I'm not sure if you could see anything on the options ones, whether that would be enabled on Sim or not. If it is, it might be quite useful, particularly coming into options week, second Friday, third Friday, so it'll be next Friday will be options week, or options expiry day on the Friday. So yeah, easiest way to do it, type an instrument in, select it, you've got to select the right month. Generally everything's going to be March at the moment. The only exception is probably gold, which I believe is trading now April, because whilst gold has sequential months, it seems to trade every other month, and it doesn't trade the quarter end months, so it trades Feb, April, other than it will trade June, and then it skips it. Gold's a weird one, I don't know why it does that exactly, but it trades every even month as opposed to each month in a sequence, or each quarter, which is the way most other contracts trade. So that sets your ladder up. Any other questions? All seems quite. Is everyone online okay? More sort of make sure everyone online is sorted. Someone asked about charts earlier, that they couldn't get a chart up.
Someone mentioned that online.
Oh right, someone mentioned it online. Yeah, best way to do that, if you just right click in the middle of your ladder and go onto the highlight that says open, you will get time and sales, or you'll get charts, columns, VAP, which I'll talk about in a second. That's going to be the quickest way to open a chart, rather than try and open a chart in a widget and not have it linked. So the chart that you open will always come up with whatever ladder it is that you've got up. In terms of drawing tools, you've got this really, really vague coloured little icon in the very top corner that if you click it, gives you all your drawing tools. Also allows you to change time frame. And I believe you can also add another chart, so you can then tab along the charts. So rather than have, as I have, a 60-minute chart and a 15-minute chart underneath it, you can just have a 60-minute chart and then you just click it and it changes to a 5 or 15. Saves you a bit of space. You can do exactly the same as well with your ladders. So you can have an S&P ladder and then in the morning switch it over to a Euro Stoxx ladder. If you want to try and save a bit of space there, makes things a little bit easier. So it's got some quite nice functionality like that. Allows you to then sort of just jump around a little bit more. Any questions on any of the drawing tools, any of the chart functionality?
Yeah, if I was sort of changing the time frame on it, what's the daily time frame?
If it doesn't say daily, 1440 would be the best choice.
Just type it in.
Yeah, I think you can just type it in and it switches like that. So yeah, there's a lot of sort of the keyboard functionality. You can just type in time frames and they switch. Yeah, 1440 for any of the daily ones. Usually I will have up an hourly chart, and depending upon the market, a 15-minute or a 5-minute. Faster markets, 5-minute, slower markets, 15. Just because the slower markets, you'll end up with a 5-minute that just goes nowhere and does very little for a while. And it kind of ends up sort of giving you a lot of wasted space without telling you any information. So yeah, I'd have also, if you've got them all on tabs, have a daily of everything you trade as well. Every so often there will be a big level that comes up that it's so easy, and I've done this in the past because I only have a few daily charts up now, but I never used to have a daily chart. I'd always say, oh no, it's all right, I'll check it in the morning and I'll remember these things, and you don't. So I'd have a daily chart up, that way if something, a big area comes up, you're ready for it. Anything else in terms of charts? On the daily chart, I would put a couple of moving averages on it. I always have a 200 period and a 50 period on a daily chart. I think they're the ones that people watch the most. They're the ones that will get focused on. We've still got quite a long way, incidentally, in the S&P to the 200 moving average. I wrote it down today. It's at 2534. So still a fair way to go to hit that moving average, which I actually think we would hit it if we went to the limit down. Yeah, 2534. So we have actually hit it already today, and we bounced from it. So we went 5 handles through it and bounced. But if we go back there again, that 2534 is from the cash session on the S&P, not the future session. Which incidentally, I don't believe you guys can switch it to a cash and a future session. I have my S&P whereby I have a cash period and then a futures period. You may be able to do it, it might be an option. If it is an option, it's likely a right click on the bottom axis with the time on, and then you can create a custom session So if you do want that custom session, it is 14:30 to 2100 UK time. That will only be the S&P session, so at least then you'll be able to see where we've got a gap. For example, the S&P from the cash session yesterday, the low was 36s, I think, something like that, and then we've come back and filled the gap in the overnight session now. So yeah, that's your charts, all nice and easy.
So did you say you use 50-day moving average and 200?
Yeah. I think the 200 is more important. I do have a 50 and a 200 on most of my hourly charts as well. Now we'll talk about that next week. But I'm not someone who follows moving average sort of strategies so much as, you know, one's crossed the other, therefore I want to be long, I want to be short, I'm going to hold this until one crosses back. It's more, if a moving average has not been tested for a long time, I feel that first test of it, particularly if it lines up with a level, often works very nicely, at least for a short-term bounce. So I'm not sort of going to buy a moving average and go, right, that's it, this is the low now, we're going to get a new record high or whatever the next big area is. It's more a case that the first time you get there, I'm expecting a reaction because people have been positioned and you know that people have strategies around it, so they will exit at those points. I was talking to Samir not yesterday, Friday, and he was saying about targets on technical patterns. It was like, first time it hits the target, so often you get a reaction from it, even if you don't agree with having a target on certain things. Other people do, and other people do follow it to the letter, and they will get out there, and so you do get a reaction from it. Right, just go through the ladder in case there's anything that people are not sure about. This is the thing that's caught people out most in the past. What you need to have, you need a number in this box. If you don't, you will always have to enter a number before you click a position. So whatever you put in there is what you will always default to. Like I said yesterday, start off with whatever you feel is comfortable for you. 3, 5, something like that. Because the fact your P&L at this minute doesn't matter. It's more about getting involved, getting used to what's going on, trying to make the most of little things that you start seeing. So that's always your default. If then, so say you put that at 5, if you then click a number, say 2, that will pop up in this box and that will be your next clip. So the reason that you have that is if you're in a 5 lot position and you want to get 2 out, you can just press 2, click, and you get 2 out. Beware, if you press 2 and then press 2 again, you'll click 22. And that's happened before, and that's very frustrating. So the easiest way around that is if you do change the number, just click once in the middle of the ladder and it will take it off. It will sort of like take the highlight off that, so you won't have it. Position is whatever you've been filled on. It's red if you're short, it's blue if you're long. That's also been another confusion for people in the past, saying that they're long when they're actually short, or short when they're long. And I was one of the guys in the first group who's like, yeah, I was buying it there, and I've done really well out of it. I'm like, how have you done well by buying it there? It's just gone straight down. He's like, yeah, I bought it. I was like, no, you sold it. Yeah, I had a red box. Yeah, you sold it. So it does happen. Some people do get confused with that. So yeah, that's your position. If you're in a position and you press P, your position will go into this box, so it will become your next clip, which is useful in a situation where you need to get out of a position, or equally where you need to add and add and add. So say something that's happened quite a lot today, you've had a large piece of size in the S&P, particularly happening in that starts to move up the ladder. You can get in, press P, double up, press P, double up, press P, double up, if you want to be super aggressive in your pyramiding. So yeah, that's all of your positions. Average position is there. What your average position does do is it will generally, if it can't put a bang on average between two prices that you got in, because it's say halfway, it will usually move towards the more adverse situation, which is frustrating psychologically because you feel that it's not looking as good as it might, but it always seems to shift towards the more adverse position. When you put a bid or an offer in, you get a couple of little numbers here. One of them tells you how much you bought, one of them tells you how much is working. That's what the B and W stand for. It's S and W if you've put an offer in. So you can end up with a situation where you end up with that switching to 1 and 4, which is frustrating. Whether you want it or not, position in queue, this gives you an estimate of where you are in the queue, so you know you need 325 to trade to get you in. Does it help you in any way? I'm not sure it does. I've stopped putting it on mine. The reason being, you can become frustrated that you don't get filled, or that you're not likely to get filled, which then means that you start moving your order up, which then makes your risk skewed slightly, just because you've looked at that and gone, well, I won't trade 300 lots. If it's traded through there already, it must have traded more than 300 previously, so it probably will do it again. Equally, what I've found that it can also do is, if say market comes down, trades, and your little position now says 5, you're like, right, I'm having that next time. Doesn't matter what happens, I'm going to get that. And so even if you don't think that's a good trade anymore, what happens is you go, right, it's come back down, sell there because it would definitely get my 5 there, and I can nick a tick on it. And the amount of times that you sell there and it doesn't trade any further down, and now you're just short in the middle of nowhere for no good reason. Or you end up just getting filled on that when the trade's no good anymore. Maybe you wanted that for one reason, that reason's not there, and all of a sudden you're now long where you don't really need to be or want to be. All of these little things you can get by right click, columns. For some reason there's also a drop down right click, volume at price, which I don't really see why you need that as a separate click, because you can just click it on here. Volume at price is very useful. Effectively that gives you a sort of market profile. What TT Web does very, very nicely as well is shows you it's split between what was bought and what was sold. So if you've got a box that is very, very blue, all of that was just buying into the offer. It's very red, it's the other way around. So what you could start observing is perhaps you see a shift, and say one of these gets very red. Effectively that's showing there's a lot of selling into a price. If it then breaks through, you know that someone's been buying it here and then they've been pushed offside. So quite useful, that bit. I wish I had it on mine, but we don't, unfortunately.
How can you turn it on? Volume at price on?
Yeah, volume at price. And if it doesn't come up with this, then go into this next column down, the volume at price one, and I think it says split bid and offers. Yeah, that's your position in queue. Number of orders making up a bid, the order head count. This I feel is very, very useful, but in practice it doesn't actually seem to be quite as useful as you might think. But essentially what it's doing is it tells you how many orders make up that 580, so it's 132. You can deduce from that that there's an average of a 4 lot.
This is level 3 data?
Yeah, I believe so. I think the only time it really comes in useful is if, say you've got 900 here and you've got 500 just above, but effectively the order head count is the same. So from that you can have a reasonable assumption that probably there's a 300 lot in there at least that is a real order. It's very useful when you start then seeing this number reduce and then this number reduce significantly, but you still got, say, one large order in there. So say this drops to 500, but that number drops down to 60. You know that there's a load of people who've taken away 1, 2, 3 lots, and still you've got that large order. So it's basically to do with the ratio of the number of orders and the order that's there. Yeah, I think in practice not always that useful apart from flagging up where there is a large genuine order. But I think you can kind of see that anyway. When you have a large genuine order, the market is either going to trade through it or it's going to trade away from it. If it's not genuine, by the time you get there, it will probably pull. So I don't necessarily think that you need it on, but it may be that you find that there's something you can deduce from it that perhaps I've not. One final thing, last traded quantity. So that's the last amount that's gone through. What this is showing here, so it's got 191 lots. It's not showing that the last trade was 191 lots. What you will get is the first sell will turn that box red, and then any additional selling will turn it white and then total up to whatever it is. So even if someone sells another 200, that will just stay white and it will go to 391. You'll then get green if someone buys a 1 lot, and then that will, even if they sell another 300, it will then go red and then white again. I do think that's very useful to have that little box up. Tells you quite a lot about what's trading, about if say a price is continually getting hit. So you will see, perhaps it only stays as like 60 or 100 on the bid there, and that's already run up to say 1200. You know that actually they're buying a bit more than what they're actually showing up. Yeah, they're all your bids. This is obvious stuff. They're your bids, they're your offers. And then if you want to get into a trade, you either can join a bid or you hit market. If you click above the bids, you will get in at the best offer. If you click below the offers, you will get in at the best bid. So you will take something off this number, depending upon what size you trade.
Like when it's on limit.
Yes. Yeah, and I think the next bit was coming on to that. Yeah, we'll come back to order book. Right. Let's go down. Yeah, order types, and then we'll go back up and do the rest of it. Yes, limit order will either join the bid or it will hit market. If you have a market order, and I do not understand why you would, it doesn't matter where you click, anywhere on here, it will sell. I don't see why you would want that, because part of the skill of trading is knowing that if someone keeps buying 93s, there's no point in you selling 92 3/4, because you could join 93s and get filled, and that way you've just made yourself a quarter tick, or put yourself at least a quarter tick better off. So I don't really see what the benefit of the market order is. because if you want to sell at market, you can just click down here and it still gets you in, but you don't run the risk of just clicking somewhere up here and you're in a trade. So I would always have that set to limit for your general trading. Limit to market doesn't seem to work. I'm not really clear on, or market to limit doesn't seem to work. As far as I can see, market to limit would seem to be that if you don't click market, it will click you a limit, which is what limit does anyway. So that seems a little bit pointless. Stop limits and stop markets. Now these are two distinct, different things. Well, they're the same idea. It's just how it works. If you put a stop in, you have to put a stop below the bid or above the offer. Sorry, below the offer or above the bid. And the idea is that at that point, if anything trades that price, your order will go off. The difference between a limit and a market order is with a limit order, you can set the limit that it will trade down to. So say you've got your stop limit at 91 3/4 and you say give it 5 prices, it'll go 1, 2, 3, 4, 5. And if someone sells and sells all the way through all of those bids, your stop will just join the offer there. So you won't be out of your trade. Difference with a market order is if that happens, it will hit wherever it goes. And so if all the bids disappear and someone takes out 50 prices, you will still sell the bottom price, or you'll sell the next price that is available. And the way that stops work like that is it's a time-based entry system. So if I put my stop there and then you put your stop there later, I will get the next price before you. So if my stop then takes out another price, you're going to get another price lower. And so you can end up with a situation that a stop sets off a stop, sets off a stop, and then you get filled. And generally when you get a large stop, it's been there for quite some time because it's someone with a much, much larger position. So just be aware of that with the stop market. I generally use stop markets just because I feel if you want to be out of a position, you should be out of the position. If you use a stop limit, you could end up missing and then you're stuck deciding what to do with it. I think it varies between markets on what's better to use. In a thicker market, I think a stop limit can be more useful because the fact that a thicker market, if it does take out a load of prices, you don't really want to be selling the low because it's quite likely to pull back up. Whereas a thinner market could very well hit stop, stop, stop a little bit easier. So a stop market, whilst it will likely give you quite a bit of slippage, i.e. it tries to hit there, fails, and then just keeps selling lower, it will at least make sure you're out. So it's a personal preference between the two. The other way that people use stop limits as well is a way to pyramid a trade. So say you're in and you believe that beyond a certain point the market should accelerate, you can put a stop limit at the level with the idea that as it trades the level, it gets you in and then keeps going. But what it doesn't do is if it does just jump straight through the level, it won't then pyramid your trade right at the high. So you don't really want to sort of get a really adverse position in your trade. And usually if you're playing for a move like that, you're playing for the market to jump and then get out, and so you don't want to be jump, buy it and then try and get out, because all you're doing is just taking a loss on that bit of pyramid. So that's perhaps where a stock market is going to be a lot more useful in terms of sort of getting you in without too much slippage. And ultimately, if you don't get in, you're still not at a loss because you've still got the position that you had before. Everyone happy with stops, etc. Using stops as entries, not something that I would recommend particularly. It is not something that most risk managers would recommend. For the risk that you do get the massive slippage and you end up getting in at the lows, which can happen. You know, for example, if you'd done it on the Swiss National Bank day, your stop would go off and you'd think, yes, I've sold it, and actually you probably sold it 1,000 ticks lower, and you're probably in quite a bit of trouble then in terms of getting out. So I wouldn't recommend it. I said I'd tell you a story about it yesterday. Mate of mine used to and we all did this on certain figures, and you could do it as a strategy on certain economic data, that you would put a stop on both sides of the market with the idea that if it's good, it will go up, hit your stop, get you in, and you can then get out, and likewise the other way. Now in a thick market this worked reasonably well, and it was a trade that we used to do on Chicago PMI. The reason being, Chicago PMI was released via a phone, so you didn't get it released to a newswire, so the computer systems couldn't plug into the phone line. So what you could do is they would then get it slightly lagged. You could then have a stop in to get in as soon as it moves, knowing that the computer is then going to put you on side. Now in the S&P that was generally okay, because prior to the number the S&P stayed rather thick, so you'd have say 1,000 or 1,500 lot on the bid or offer. You put a stop for say 100 lots, you won't get slippage on it, and worst comes to worst, it won't take your trade bid, and you'll take a quarter tick loss, which isn't too bad risk reward if when it goes it gives you two handles. So that was always a trade on Chicago PMI. He then started to push this into virtually every number, so US CPI, all the rest of them, and then started to do it on natural gas. Now the problem with natural gas is it goes super thin just before the number, and so a couple of times he got hit on both stops before the number, and because it's very thin you get slippage up and slippage down, and in order to make sure he didn't get hit on both stops, he would have say a stop 20 ticks above market and a stop 20 ticks below. But if you got hit on them, you'd still get 20 ticks of slippage. So if you got hit on both, he'd end up taking an 80 tick loser like that, and you can't do anything about it. You don't know it's coming, and all of a sudden it's like 2 seconds, bang, there's your 80 tick loser. It ended up costing him a lot of money because he built this sort of strategy up in lots and lots of markets and was actually trying to put quite a lot of size in it, and his mistake was putting too much size in a market that couldn't do it. So he was trying to do a 60 lot in natural gas, which if it went wrong you're taking 60 times 80 tick loser, which is pretty hefty. So it didn't do him any favours, and personally I think that was the unwinding of his career, and it's a shame, but that's what you get for trying to outsmart the game, I think, a little bit by doing that. So I would suggest don't do it. I would suggest it's not the greatest idea, but in certain situations I can understand why you could use a stop to get yourself in on a more technical trade, but over a figure it's quite a dangerous game. Right, we'll swizz back up. just up to here. Your order book, you can put loads of different orders in the order book, adjust them all via the order book. What I believe you can also do is you can hold orders, which is quite useful. So if, say, you've got a level that you particularly want to trade, you can put a bid on it and then hold that. So effectively it doesn't show as a bid on that level, therefore meaning that you still have your full number of limits. Say you've only got 20 lots and you think that this level's really good, I want to buy 5 there. If you put 5 lot on the level, you've now only got 15 lots to trade with. So you can put the order down, and I believe you can then hold the order, which at least then when we start coming back off to it, you can then unhold the order and you're back on the level. Yeah, everything can be changed up and down, just click change or cancel. Personally, I don't have an order book because I have a habit of, when I get out of a trade, I click delete all. So that little box there, I will usually get out and click delete all. So even if I have a bid on a level that I've like, yes, I definitely want that, if it gets there, I have a great tendency to just go delete all anyway. So even if I do put them all in an order book, I will probably delete them all accidentally. So I don't use an order book. I do have a fill window up. Tells you buy quantity, you sell quantity. Open position, that's your P&L at the top. I believe on the sim it will only show it in dollars, which is frustrating, but doesn't really matter too much. I would, if it gives you the option, switch it to either quantity times price or ticks, just to take the money element out of it. So I think if you focus too much on money, it becomes quite difficult to sort of keep your focus. I don't worry too much about your average buy, your average sell. That gives you the accumulation from the whole day. If you're someone who does quite a lot of trades, chances are that's going to be within a half tick of each other. I don't see why it serves to tell you. So I wouldn't worry too much about that. Personally, I don't keep my P&L up. I find that what it serves to do is get you out of trades or not get you into a trade, because you'll see your P&L at a certain amount and you'll think to yourself, maybe I don't need to take this trade, or maybe I don't want to take that risk. Or you'll be in a trade that's gone on side and your P&L will go over a round number and you'll go, oh, it's hit that, I'll get out, and it totally skews the whole point of the trade. So I generally don't have it up. I will flick it up every so often. Fill window, like I say, that is useful. Just if you have sort of added to trades, to actually know where you've added them, rather than sort of just rely on your little box. Because if you've added lots and lots of times, I find that the box can be slightly skewed. What the average price box doesn't do is, if say you've sold 5 and it's moved your average price down, you get out of 5, it doesn't move it back up. So it stays lower, which in a way is a good thing because it stops you then becoming overconfident in the trade, but it's not a genuine reflection of where your position is. Jigsaw does do that, and Jigsaw shifts it back up for you, which is quite useful. Everyone online all right? Oh, mine is grey, VAP. Okie doke. Your VAP is grey. Yeah, I try right click, try it again. If not, I would restart it, because that's the standard IT answer to everything. I would have a go at restarting it. If not, drop Stephanos a quick email and I think he might be able to help you out with that. But yeah, you should be able to get the VAP up. I think it's probably one of the most useful things that does come up here. Alright, bit of terminology. This is more old school terminology and not what everyone will use, but generally you will hear certain phrases going around. you can either be bid or offered. So there you be bid, there you be offered. Something that people, that, as I say, this more comes from someone in the previous course, that he would say he's offered there. Why he's offered there, I'm not quite sure, but you're always offered above where it's currently traded, and you're bid below. Old school terminology, you are bid a price for an amount, or you are offered an amount at a price. That comes from sort of a pit trading terminology. You will still hear some guys will use that kind of phrasing. Also, people will be funny about you can't pay down. So if you're short, you can pay up by buying, but some people will say you can't pay down. I would generally use the phrase hit market. Again, technically people will say you will either lift the offer or you'll hit the bid. So people again would say, well, hitting market is not entirely true because you can only hit the bid, you lift the offer. Again, semantics, but if you say to me, oh yeah, I hit the bid, I know what you mean. Likewise, if I say that, you know what I mean. If you get filled, means you've been hit on a bid or an offer and you've got it. Part filled is when you don't get all of it. This can happen even if you click above market. So if you click there, you can often end up, if someone's clicked just before you and they take 77 of the 79, you'll only get filled 2. If you click here, then you might end up getting filled 2 here and the other 3 here. And you get a sort of split order. Doesn't, again, happen very often in thick markets, can happen quite frequently in a thin market. If your order's been pulled, it's basically you've just cancelled your order, you pulled it. That's something that people are getting done for spoofing with now. If you go test your limits out and you stick 20 lots there and then pull it, and then you're like, maybe I've got 25, and you click, and then you've got 25 and you pull it, you can get done for spoofing for doing that. So if you're going to test out your limits, test them a long way from market, or test them over multiple prices. So do 5, 5, 5, 5, 5. Best bid, best offer. So that's your best bid, the highest bid, that's your best offer. Nice and simple terminology, but yeah, just thought I'd make sure everyone is on board there. Has Peter sorted it out?
Yeah, it's all good.
All good. Perfect. Did Steph sort it out for you? Or right, so back to order types. We've done limit, we've done market, we've done stop market. You've then got, if we go back up very quickly, all of these other options. So you've got bracket and iceberg, etc., etc., etc. The only two that you're really going to need is a bracket and an OCO. You can have an iceberg order. So what you would do there is you would set your iceberg to whatever size you want, your maximum clip, for example, and the increment that it will sell in. So as soon as you get filled, say you have an iceberg of 20 lots and you do it in 2s, it will put 2 on the offer there, and every time you get filled it will just put another 2 there until you've got hit for all 20. The point of that is to disguise your size so that you don't go, oh, I want to sell 2,000, and everyone goes, oh, there's 2,000, sell, and wait to see if you'll move down. So I don't think it's something that an individual is ever really going to need to use. The only time I could think that you would is if you're in a position and you want to get, again, I don't really see why you won't just put the order in, but it's like perhaps a slightly thinner market, so you still need a reasonable size position. So say you've got a 20 lot in the DAX, you might try and iceberg it out at a certain price, so that as it gets there, it will just sell you two. Might be the best way to do it. TT retry doesn't seem to work. TT stop, just use a stop. A time sliced order is an order whereby, a bit like an iceberg, but what will happen is at a time increment it will keep adding to a certain price. So it will keep putting on a position, or it will continue to, like, it will sell, say, a 2 lot every minute and just keep doing that. You do occasionally see it in the market. You will see it on the ladder, whereby you will see, particularly in the Bund, I've seen this, you'll see someone just hit market and they will just go 2, 2, 2, 2, 2, 2, 2, 2, 2, 2, and just keep doing it. This generally then gets filled and then moves through them. But yeah, another thing that I think is not necessarily going to be something you use. Trailing with a limit, I think I might have an example of that in a sec, so we'll go on to that in a minute. Bracket order will automatically enter a stop and an exit. So you can put your profit target at whatever, you can put your stop at whatever. So as soon as you enter the trade, it just goes bang and puts the orders in. Quite useful if you're in quite a quick market and you want to sort of try and scalp it, or you're using if you are using a strategy for a stop entry, say above a level, you could have the stop entry, I believe, with a bracket as well. So as you get filled, it will then put you an offer to get out and a stop, meaning that if the market doesn't go, at least you have some safety behind you, rather than you get filled and then it starts coming off and then you've got to try and rush out. You change the stop type as well, so you can have that as a stop limit or a stop market. And you can also, if you go with a stop limit, you can change how much it pays up by. So whether it does 1 tick, whether it does 5 ticks, whatever you want. OCO is the same, basically. But what an OCO does differently is it will pull one order or another. So if you're long and it hits this one, it will just take this order away, whereas the bracket won't. So you do need to keep watching it with the bracket, just in case you get long, you get out, and then you end up short for no good reason. That's particularly useful if you're going out at lunchtime and you want to keep a trade on. Put an OCO in. Just allows you to sort of have a bit of confidence that it's going to sort you out if you need it to. The other way to do that is ask your mate to pull the order for you and hope that they remember to. Otherwise, you can end up still stuck in a position when you get back. The trailing limit. This again is an order type that I'm not entirely sure you would really use, but I can see why you would want it. The idea is that, say you're in this long position here, you have that would be a trailing stop. A trailing stop, with every tick higher it goes, it would move your stop up a tick, but it wouldn't move it back down a tick. So the idea being that it should keep going on side and never pull back by more than a certain amount. If it does, it will get you out. The trailing limit is more for if you're trying to get in, but you don't want to buy the high. And so as the market goes up, your limit order moves up the ladder, and then as soon as you get a pullback of a certain amount, it gets you in. Something that I think perhaps is something you'd more use if you use footprint, in the sense that if you use a footprint and look at the rotation, if a market regularly rotates back, say 6 ticks or 5 ticks or whatever, you can have that order, say, on a 5 tick trailing limit, and thereby as it ticks back, it should get you in sort of towards the lowest prices of that rotation. For me, I think it becomes a bit arbitrary that the market can start moving higher, and then if it does tick back, yes, it's ticked back 5 ticks, but now you're in the middle of nowhere just because you had this trailing bid going with you. So not something I would use, but experiment with it. It may well, sort of help you out a bit. At least what it does do is it stops you chasing a market when it goes. Some markets that sort of drift quite slowly become quite easy ones to go, oh, I've missed it, oh, I've missed it, oh, I've missed it, oh, I've missed it, just buy it. And that moment that you go, just buy it, is so often the high. So yeah, that's where you could use trailing limit. All right, that is pretty much it in terms of sim. Everyone happy with how it works, how to operate everything, order types, etc. Yeah.
Right. I just had one question about stop actually.
Yeah.
So like on say something like Jigsaw, you'd say click at market, and then you could right click on a bid or offer to put in an automatic stop. But on this, you have to then choose.
You will
stop as an
have to
order type
choose. Yeah.
next.
Yeah. Choose it as an order type. That was one other thing. Deleting orders, just left click them and they disappear. So that's something on say Jigsaw. You left click in and you right click out, don't you? But yeah, you need to select stop to put it in. I don't know if you might be able to get it as a button.
Yeah, I've just done that.
Oh, you have?
Yeah, you can.
That's how I do it. I just have a stop button in case you need to use a stop.
Yeah.
Personally, I don't use stops that much. I just find that I feel that I can trust myself enough to get out at the right places to say that that's done for a trade and get out. The only time I really use a stop is if I'm trying to hold on to something for a while, or if I'm going out for a bit, something like that, then I may well put a stop in. But otherwise, I won't, and I will just exit where I think I should exit. So I think we got a question. You teased how I can cancel my limit by one click. As far as I know, you should be able to just left click on it and it will get rid of it. Try that out, but that should be how it works. If not, it will be somewhere in properties because you can also set it as it will enter order on mouse click down or mouse click down and up. So you'd have to release the mouse to actually get it to enter, whereas generally you will have it just on mouse click down for speed of entry. Because some message pops up where I have a high colour and then go and clock on the trash. Wow. Because I have a message that pops up where I have a high colour and then go and clock on the trash. I'm going to be honest with you, Peter, I'm not quite sure what that means. Can you send us a screenshot? And that might be able to sort it out. And if not, we'll ask Stefanos, so he is the expert on sorting these kind of issues out. But yeah, you should be able to just left click it off. Okie doke. And I'm going to assume that Liwi, you've got it all sorted. We're all good there. All right. So we're sort of talking about what you're going to do first couple of weeks trading sim. Trade as many markets as you can, as many markets as you like, and try and do as many trades as possible. The more round trips you do, the more you're going to learn, the more you're going to pick things up. If you sit and try and wait for the perfect entries, etc., you're not going to do as many trades and you're not going to learn as much. And the point of picking the perfect entry is for when you're actually genuinely trying to make some money, and you're going to really consider every trade. But to start with, the more you sort of get involved, the more you pick up in terms of how markets trade, how people interact within markets, how your fills go through, how comfortable you are adding to a position, how comfortable you are adding when you're offside, taking a little bit off. And you might find that it actually becomes quite comfortable for you to, if you're say in a more range bound market, that you'll buy it here, here and here, and then get out here, here and here. And that will become something that's quite comfortable for you. It's not everyone's style of trading, but by having a position on, you allow yourself to then sort of feel what's going on a little bit more. If you're not invested, for those of you who play poker, if you're not actually invested in the pot, you generally don't actually care what happens, despite the fact you could learn a hell of a lot about the next pot by what happens on this one. Same thing, by having a bit of a trade on, you can sort of learn about what's changing, what's coming up, whether your long position here is actually more likely to go like that, or whether it could actually be the one that goes on the breakout and goes up. So having those positions, try and keep a position as much as you can. Try and pick anything that seems to make a bit of sense. But overall with that, you do need to sort of try and make some notes of anything you see repeat. Any pattern that you see repeat, any sort of nuance in terms of, say, do you often see a 500 lot come into a market, and what does it do? It's all about what something does when something's there, rather than just, oh, I saw a 500. What does it do? Is there a trade in that? That's why one of the things to really focus on all the time, is there a trade in that? Because if you notice that every time a 500 lot comes on the bid, it gets hit and then goes 700 offered and trades the next price, you've got trade there. You see a 500, you sell straight into it, and you have a bid at the next price. You might find that you can start picking up on people sort of flipping markets, things like that, and how markets trade when they sort of move through a level, or what it is that makes them pick up some pace. So the more clicking, the better. Particularly on a day like today, you should have quite a few opportunities, at least shorter term opportunities. The good thing about today is, even though we're quite range bound, there's quite a bit of speed in the movement, which makes learning what's going on a little bit easier, because of the fact that you get these slightly larger ranges, and with that extra speed you start to see when the speed runs out a bit easier. If something's moving very slow and then moves to very, very slow, it's quite hard to actually discern that, whereas if something's moving quick to slow, you can start spotting that a lot easier. And that's the kind of thing that you should see. For example, at the top of a range, you should see this speed slow down. Will slow down here and then start to come off, accelerate down, and then will slow down again at the bottom, as people don't have a willingness to sell the bottom of the range. Likewise, when it does break, you'll see the speed pick up here, and that's something to observe as well. So when you see the speed pick up, was that a break of a range? What happened just before? Because often when you get this speed pick up here, when you get the speed pick up out of a range, you will usually see something different in this little area here. You'll see sort of an additional sort of pick up in speed just before the break. So for example, if there's an offer there, it will get taken out and it will go straight away bid, and nothing will sell into the bid. And then it will say take the next offer and nothing will sell into the bid. And that might be different to the other times when you've got to the top and the offer gets taken out and straight away it gets sold straight back. And it's that little change that gives you the clue that actually this time it might break. That, for me, that's what I'm looking for the majority of the time. That little bit of difference at the tops that tells you this time's the one that's going to break, not the one that's going to just drift back into the range. If I see no change at the top, if I see just slowing down of activity, whilst I know that theoretically, yes, the trade should be that you move back down, it's not a trade I particularly like, because the fact that you will often spend, sorry, I've made a right mess of that. You will often spend quite a bit of time sitting here before you actually then start to come back off. And that time sitting there can talk you out of a trade, can start making you doubt the trade, and ultimately you're only looking for a reasonably small move. And so for me, I find that I run into the risk of getting out just as it ticks up, because I don't want to stay in for that slower move. Which is why, like I say, I prefer that if something changes here to try and play it that way and go for that breakout. So they're the kind of things that I want you to note down. I would recommend today trading equities more than bonds. Bonds, I think, really have slowed down. Bunds sat in the same range for most of the morning now, and it has actually got really, really compressed. DAX is probably a good one in terms of volatility, in terms of if you want to get used to seeing your P&L swing around quite a lot. S&P, I think, could be very interesting in the afternoon. You'll see a bit more liquidity come into it, but the S&P at the moment is extremely thin. Usually you'll have usually you'll have hundreds, if not thousands, of lots on the bid and offer. We have now got something that looks a little bit more like that, and that's giving you what, less than 20 on any bid and not much more than 20 on any offer. That's probably one of the thinnest I've seen the S&P. Usually I expect 100 at least on every single price. So, and what it's doing is, because of that thinness, it's done exactly that, and it can jump through prices very, very easily. You went back 3 weeks, a move like that was taking 15-20 minutes just to move that small amount. Now it's moving 3-4 handles in seconds. So it does make you change the way you trade it a little bit. You're going to have to be a little bit more thought out. But the good thing about a thin market, or when a market gets thin, is if you see some selling come in, so if you see that market start to stall at a price and hold and hold and hold, that often has a little bit more gravity to it than it would ordinarily, where if it's moving very slowly up to it, it might hold, then it might not come away from it, and then it will drift through it. So that sort of thinness and extra speed can tell you a lot more things a lot quicker. So perhaps not normal conditions for S&P at all, but it does create some quite interesting conditions. And this is something to watch out for. We've seen this a fair bit today. You sort of have 100 lot or so. I don't think 100 would be something I'd be paying too much attention to. But earlier on this morning, you had 100 lots that would move, and as the 100 moved, the market would move away from it. 400 lots, we had 1,000 lot as well. And so, you think if someone's got 1,000 here, they could take out all of those prices and still have 800 left to sell. So it creates a dynamic whereby people are very quick to get into a trade and out of a trade. So for example, if you saw 1,000 lot appear here, I'd buy it very quickly and just look for that quick move up. If he moves the 1,000, I'd buy more. If he moves it again, I'd buy more. And the moment it starts to trade into him, I'd then sell straight into him and possibly go the other way as well. The idea that he pulls it and it goes straight back down. But we'll look at a fair few examples of this. I don't want to wipe that little bit off because it will put me in the trade. Sorry, we've got a question. I don't see how I can put a volume profile on the chart or a range volume profile. Range volume profile. It should be a chart option. I've not got a sim up to be able to help you. Any of you guys seen a way of doing it?
There is chart type, which is price distribution, but that's different window, different chart.
Yeah, because that's basically a market profile,
Yeah.
the price distribution. Can you get a volume profile? I thought you could get a volume profile on there. You can't get a volume profile.
No, it's just the time distribution, not the TT one.
Oh, okay. Can you put volume on the
Maybe it's an indicator.
price distribution? That is frustrating. Very frustrating. Which is a reason to make more use of the volume distribution on your ladder, because it will essentially be the same thing. What you could do as a solution is make this much wider and use it like that. That's probably the best solution if you can't get the volume distribution overlaid on a chart, which is a bit of a shame, but not something that everyone
No,
uses.
you can.
You can?
Yeah, it's
Aha.
an indicator called volume at price, I think.
What, on the charts?
Yeah. So
Okay. Right, there we go then.
Yeah.
It's an indicator on a chart. It is, let's go back up a bit.
Technical indicator. That one.
Yeah.
Technical indicators.
Volume at price, side
And
by
then you
side.
just have to scroll down.
Which one's it under? Volume at price, yeah. There you go then. It's in technical indicators, which is this one. And then scroll down through this bit, and it's down at the bottom, volume at price, and that should then give you a sort of something like that, or it might display it the other way around. And that should also display value area within it as well, I would think, which is always a useful thing to have up. And then that would also show you sort of a migrating value area throughout the day. So yeah, if you can get that up as well. And then what we'll do in the afternoon, we'll have a quick look at support resistance, so you guys can all start playing around with your charts a little bit more. We'll look at the importance of each. So I saw on your chart a composite volume profile. Yes, can you do a composite volume profile on TT? I'm not sure. It will be an option. Once you put it up, if you right click it, it will likely give you an option where you can composite it. I'm not entirely sure. I'll just bring up one of my TT charts for you. Right, so that's what I've got on mine. Favorite indicators. I'm not sure that you can do it on TT, but what it will give you is the cumulative for each day, which is reasonably useful anyway. So that's how I have it on my TT, so it shows up as a sort of an overlay over the charts, which also gives you highlighted the value area as well, which is pretty useful. But yeah, that's unfortunately I don't think you can do any more than that on the TT web version. But if you can get the day by day, I don't think it's going to be too detrimental. And if anything, I think to start with, day by day is actually probably slightly more useful. The composite ones over a long period, unless you find a very, very large or very, very small bit of volume don't actually tell you too much. I think I've got them more up as a course of habit than something that I focus on constantly.
Has everyone got their volume area on their profile?
The value area.
Value area, sorry.
You have it?
No.
Yeah.
Does it not give you the value area? Okie doke. Yeah, there's not much. The only way you could do that then is if you have the price distribution chart and then mark the value area on your TT chart or on your sort of technical chart. That's probably the best way to do it. Yeah, so sorry, Peter, I don't think you can get a composite up. Like I say, I think the best thing you could do there is you can scroll together your price distribution charts. So if you've got a price distribution one, whoops. You can merge them by dragging these along, and that way they'll accumulate multiple days, and so you can then actually get sort of a larger profile, which will show you a more composite thing over numerous days. In terms of charting software that does a composite profile, InvestorRT does for significant amounts of time. I think some of my charts run back to 2007, but TT or Market Delta or CQG will only go as far as the current contract. So it's actually quite hard to get a much longer term composite profile if you're not using InvestorRT. So yeah, can't really give you too many more answers for that, unfortunately. But apart from that, everyone feel like they've got themselves set up all right so far. Yeah. Go
On the
on.
ladder, how could we get the view up and view book maybe?
To show on the ladder,
Yeah.
what you would usually do is if you right click them when they're on the chart, it may give you an option to export to Xtrader or export to DOM or to MD Trader or link to MD Trader.
So I have view up and
Yeah.
don't see.
And no way of right clicking on it, and it giving you an option to I would guess the option's not there then. I think it's a thing with the web
Yeah, the
version.
differences between the web version and the normal TT, so I don't think it's supported
No.
on the site.
There we go. Unfortunately, it's not there. I don't have much actually marked on my charts, on my ladders. The only thing I have is a 20 period exponential moving average that I use that sits on my ladder and moves around. I use that for trend days, basically. The market decides it's going to really trend, comes back, hits it, you buy it, or you sell it, you go with the trend on it. It worked quite nicely this morning in the DAX, came back, sat on it for a moment, and then went and made a new high. So, but no, it does seem that you can't switch them over, which is unfortunate. Everything's sorted for Peter?
Mm-hmm.
Yeah. Okay, cool. Right, in that case, I'm going to leave you guys to crack on, do a bit of trading. Hopefully it gets a little bit busy in a little bit. And then afternoon, we'll do a bit on support resistance, a bit on trend lines, a bit about when they're likely to break, when they're not likely to break, when to use them, when not to use them. And so that way you can then start building up a bit of a sort of knowledge of these things and then start applying those to your charts. And then you can start experimenting a little bit more with trading off trend lines, trading off certain types of levels. I know people use them in various different amounts. There's a couple of guys on the floor who love a trend line. I personally always have a tendency to play a trend line for a break rather than for a continuation. But I think context makes that very important. We've seen it last couple of days in DAX. You sort of have a trend coming down, test back up, test back up, test back up, and then that's been the point that's been able to get you in before the big break. So using a trend for a continuation is something I'm starting to use a little bit more. So it's all coming from just general discussion with people on the floor about it. So we're going to have a look at a few different examples in the afternoon, and hopefully it then picks up a little bit more energy. We can really sort of have a good old trade. So we'll come back at around about 1 o'clock. We have got no economic figures today. There is very, very little coming out. So it should be all very much flow-based trade if it's going to get too much movement in it today, which hopefully we should have. Like I say, I don't necessarily think we're going to do a major move in one direction or another, but I think within the range there's still quite a lot of space to actually get some decent little bits of movement. So I'll leave you guys click away. I'll give you a target first day to do 100 round trips by the end of the day. I think you can all do that. You've got to take on quite a few trades, but there's a lot of markets, there's a lot of things going on. You can all do that. So yeah, there's your challenge. We'll see come the end of the day who's managed to do 100, see if anyone's managed 200. Get involved, that way you will pick up more and more stuff. And then yeah, make notes of anything that starts popping up, and chat, stick it on the group if you're seeing something consistent. Have a little chat about it, because it might be something that no one else has spotted yet, and that could be the difference. All right, we'll come back at 1 o'clock, go and grab some lunch as well, and yeah, we'll do support resistance in the afternoon. Right, see you in a bit.